Now, if I was a professional and told you that the country's producers or the sellers were not making as much money or selling less, and jobless claims have gone up, and the US Treasury debt has just literally gone up by over 200 billion, would you think that's good news? Well, apparently the markets think so. Welcome, chumps. I am the Chump Change Trader, and this is the Small Account Challenge where I take $2,000 and try to turn it into wine. Today's April 13th, 2023, and the markets today has basically rallied over the news of the lower PPI. And what is the PPI? The PPI is the Producers Performance Index. And so it came in basically lower than what was expected. The expectation in this middle column right here is that it would have been flat, but instead it contracted. And the core PPI also had a lower than expectation, performance. And the initial jobless claims actually went up in terms of what was expected. And so the interesting thing is that these news, and of course yesterday the Treasury budget also went up by literally 432 billion. So we're 432 billions in debt in terms of where we're at as a government, or at least a budget rather. So that's kind of a weird thing to think about, right? It's that all of this bad news is happening, and yet you look at the markets. This is the Qs, which represents the Nasdaq, and it jumped more than almost $6, to almost 2%. And look, it's still climbing. What's going on there? And so that's kind of like a head scratcher for most people to think about, that good news is bad news and bad news is good news. But that's kind of the narrative during these rate hikes, where we're expecting and the market is anticipating that the market or the economy should be shrinking. The economy should be slowing down, because that is the intention of Jerome Powell's rate hikes, is that there's a contraction in terms of market participation. And when there's a contraction in that participation, then we can somehow curb inflation. And so coupled with Thursday's data from the CPI, that it's showing that core CPI, consumer price index, and just the regular consumer price index did go down, coupled with this PPI number, it's a reflection of, okay, now the consumer goods and stuff and the consumer spending items are contracting. Now you're also having a contraction in the producer side. So those two things are kind of lining up. And so that's sort of the narrative. But when you go from, bad news is good news, and good news is bad news, and when you flip that narrative back to bad news is bad news and good news is good news, that's when you're finally and officially in a recession. And on that notion, let's take a look at the trades. So we have our 2 iron condors and 1 vertical put. Basically, it's still in a kind of like a standstill right now. Let's look at that first iron condor that we have. With that rally movement forward, we're pretty much pushed into the upper 3/4 bound of where we're at in terms of our window. And then of course we have that put vertical, which basically is going to favor the upside. So this is basically being helped by the movement forward, and that's okay. That was the anticipation. Combined together, we have pretty much this window right here, where in the next 8 days, if there is a rally tomorrow, it's pretty much going to look okay for it in terms of where it is range bound wise. But let's take a look at that second iron condor that I had set up for 36 days out. Now that is also, having more of a bullish outlook in terms of where the range is, and the upper range is being at the 475 and the lower range being at the 402. So without really anticipating all this market and macro kind of news and sort of direction that we might be heading to, if that's the case. The trades that I have set up are pretty much covered in sort of anticipation that there is some extra wiggle room when there is movement to the upside. Now, I might get stomped out in terms of the 36, DTE Iron Condor if there's a crazy amount of movement day after day after day after day moving forward. But we do have earnings coming in, and it's majority of the banks, Wells Fargo, and then we also have United Healthcare, I believe, which is also another Dow product. So those are going to be kind of another catalyst for either an upswing or a downswing, depending on how you look at it. But in either direction, we're looking pretty okay and good in that regard. Because the goal of all these trades that we have here, if you just sort of sandwich them all together, is really just to keep the markets within the bounds of what we're anticipating. And we're already sort of set up for a more bullish outlook. But if there were a contraction, you would hope that the contraction isn't as deep and as aggressive as it is a bullish sort of outlook. So that's pretty much where we're at. Hopefully we'll be able to have a more calmer day, but you can never expect that. And at the same time, volatility is your friend when it comes to getting as much premium as possible. So who knows, maybe I'll open a new trade come Friday if I see there's a specific opportunity to come. If you have any questions, leave a comment below, and I'll catch you on the next one.